Welcome back to Tax to You, the practical tax channel where we answer all of your tax related questions. Today I'm going to be telling you all you need to know about payments on account for self-assessment. To do this, I'm going to cover what payments on account are and who actually needs to make them. I'll show you a live example on screen of where payments on account appear on the tax return. And then I'm going to show you how to remove or how to adjust your payments on account. Before we get into it though, don't forget to like the video and subscribe for more helpful tax content. Submit your questions in the comments below and we'll ensure to get them answered either in the form of a reply or possibly a dedicated video just like this one. Check out our website using the link below, because although our aim is always to educate our clients as much as we possibly can and share this information, we understand that tax can be confusing, stressful and time consuming. That's where we can step in and help. Check out the thousands of reviews on Trustpilot from clients who trusted us to do just that. So what are payments on account and who actually needs to make them? The most common reason an individual will need to make payments on account is where their total tax liability from self-assessment is more than £1,000 in a tax year. Payments on account are calculated as 50% of the prior year's tax liability, and you make the first payment on account by the 31st of January, along with any tax liability owing for the previous year. The second payment on account is then due by the 31st of July that follows. So let's assume the 21-22 tax year was the first year that I had to complete a tax return, or even just the first year that I have exceeded that threshold for payments on account, and that once I had input all of my income, my tax liability from self-assessment was £4,000. Now that tax liability of £4,000 would need paying by the 31st of January 2023 all in one go, because it's the first year. On top of that, I would need to make my first payment on account towards my 22-23 tax liability of £2,000, which is 50% of the prior year's liability. Again, that needs paying by the 31st of January 2023. My second payment on account of £2,000, which is the other 50%, is then due by the 31st of July 2023. Now, assuming that when I actually complete my 22-23 self-assessment tax return, I have the same tax liability of £4,000 as my income hasn't changed, then those two payments on account that I've already made are taken into account, and I would have a zero outstanding for that tax year. I would, however, still need to make a payment on account of £2,000 towards the following year's liability, and then the process continues. What you might be wondering though is what happens if my tax liability changes from year to year, which it often does. Well, if your tax liability increases from one year to the next, then that will mean the payments on account that you've made won't be enough to cover the full liability. In this case, you make a balancing payment by the 31st of January following the end of the tax year. Let's run through that example again, but with increasing liabilities. So let's assume that my previous example still stands, but when I came to complete my 22-23 tax return, I actually had a £5,000 tax liability. At this point, I know I've already made two payments on account, one by the end of January and one by the end of July, both for £2,000 each. So that would leave me with a £1,000 balancing payment to make by the 31st of January 2024, along with my first payment on account towards the 23-24 tax liability, which will now increase to £2,500 because it's always going to be based on the prior year's liability. And if it's the other way around, where your tax liability decreases from year to year, resulting in an overpayment, then of course, instead of making that balancing payment, HMRC would actually be refunding you the overpayment instead. Now, how does this actually look on the tax return? So here I am, I'm logged into my government gateway account. I'm on the check your return section 5 here, which means I've already entered details of my income. It doesn't really matter what the income is. In this case, I've got employment income. I've got multiple types of different property income, furnished holiday lets, other property income. I've got capital gains in here. What's important is that I'm triggering the payments on account. And in this case, because my tax liability is in excess of £1,000, they will trigger. To get to the details of the payments on account, you can either click on the View Your Calculation tab here, section 6, or scroll to the bottom of the page and then click Next. And here we have the tax calculation, or the summary of the tax calculation. My tax liability for the 22-23 tax year was 6732. And again, because that's in excess of £1,000, it's asking me to make payments on account here. So my first payment on account, or for the 23-24 tax year, which is the following year, is 3366, which is 50% of my tax liability from the previous year. And what you can see is that both of those, the 22-23 liability and my first payment on account, are due by the end of January 2024, giving me a total payment of 10,098 that I'll need to pay. If you then scroll down, that's my first payment on account taken care of. You'll see that they're also mentioning, don't forget you'll need to make a second payment on account, again for the 23-24 tax year, again for 3366 by the end of July 2024, and those will be my 2 payments on account made. So again, assuming that in the 23-24 tax year, when I eventually get to completing my return, and I get to this point again, assuming that my tax liability is exactly the same, I will have actually paid that in full. And the only thing I'll have to worry about is making my payment on account. So if everything stays the same, then next January, I'll actually only end up paying 3366 because I won't have to worry about the prior year's liability. It will have already been paid. And now let's take a quick look at how to actually reduce your payments on account. My only caveat here is that you need to be able to justify reducing a payment on account. Okay, this is money you owe, and if you just do it for the sake of doing it, you don't want to make this payment on account, you're going to end up getting yourself in trouble. If I knowingly reduce my payments on account and I end up underpaying tax in the following tax year as a result of that, then you're almost certainly going to have to pay interest on that. Potentially penalties as well if HMRC deem it seriously enough. So just be very careful. You need to be able to justify it. You want to try and get this right. You want to try and be as accurate as you can, but you need to give a reason and you have to write down that reason for it as well. So the other thing is, just remember, we're looking at the tax liability here. So if I'm thinking, do you know what, in the next tax year, I'm going to earn £5,000 less. And let's say in this case, I pay, my highest rate of tax is 40%. That would be about right based on this income level. So if I'm paying 40% tax and my income next year is going to reduce by £5,000 or so, then it's only the 40% that I'm really interested in. So 40% of 5,000 is £2,000. Okay, that will be the impact on my tax liability next year. Again, you're never going to get this perfect, but you need to do a little bit of a calculation to figure out the impact on your tax liability. So if my tax liability is going to decrease by £2,000 next year, then I'll want to reduce each payment on account, remember there's 2 of them, by £1,000. It's quite straightforward, but it's that liability that we want to consider. To do that, to reduce the payments on account by £1,000, what I can do is scroll down to the bottom, save and continue, and then we're presented with this question here. Are you claiming to reduce your 23-24 payments on account? I'll say yes. And then you can see I need to provide details of, first of all, what I want to reduce them to. So again, if we just check the payments on account from previous, 3366, I want to reduce them to 2366. So I'll say yes, enter the amount in here. I'll reduce them to 2366. And then I need to give a reason why. So I could say I'm expecting my employment income to reduce by £5,000, we said, next year, and overall tax liability to reduce by around 2,000. That's sufficient. You don't need to go into perfect detail and write paragraphs and paragraphs, but you need to give some kind of a reason. And again, don't worry too much if you're not 100% accurate, but like I said, you don't want to mislead them and end up in a situation where you underpay tax because you've clearly reduced your payments on account just to avoid paying them. And from here, the only thing I would need to do then is save and continue, and then move on to submit the tax return in the usual way. After watching this video, you should now understand what payments on account are. You should know who needs to make payments on account. You'll recognise where those payments on account appear on your tax return, and you should be able to reduce your payments on account using the method I've shown you. Don't forget, at Tax2You we provide an easy to use self-assessment service and would be happy to help whatever your situation. Just follow the link below. That is all for today. Don't forget to check us out at tax2you.co.uk and subscribe to the channel for more helpful tax content. Thank you for watching. See you next time.